All right, good people. Midweek update here for Wednesday, June 1st. And, in the last few videos, I've given you my bigger picture outlook on the market. We got busted weekly charts. We got daily sell signals. I think in the bigger picture of things, we're still going to see more downside. So I do think eventually the market's going to make a new low. But then this morning we also looked at the daily chart, and you got the S&Ps, the QQQ, the IWM, cranking out 3 consecutive closes back above that daily 21 for the first time since March. So the bigger picture suggests eventually we're going to roll over. In the shorter term, there might be a little bit of upside, but for the month of June here, we've got to keep that third alternative in mind. We might not rally back to the highs. We might not roll over and make a new low. We might just kind of generally trade sideways. So, if that is the case, I got a trade idea for you here. We've got a monthly chart of the S&Ps with the quant levels. So with the quant levels here, we've got monthly H2 up around 4450, and then we've got monthly L2 down around 3700. Okay? So what this tool tells us is that over the last 1100 monthly periods, about 84% of the time, we're going to finish the month somewhere inside of H2 and L2. So we'll clean it up a little bit, and I'll put that into plain English for you. But pretty much what that tells us is there's about an 84-85% chance at the end of June we'll be somewhere under 4450 and somewhere above 3700. So I think potentially Iron Condor might make sense here. And don't get me wrong, we could roll over in a huge fashion and take out the lows. So be ready to short the market. We could rally, I think, a little bit higher than most folks think. So be ready to play the upside. But I think for a bit of a monthly income idea, there might be a little bit of merit to this idea. So here's what I'm thinking. June 30th expiration. It's a pretty big expiration. This is one of the quarterly expirations. So June 30th. And I'm thinking of Iron Condor at the H2 and L2 level. So for L2, we can go 3750. So we'll sell that put, and we will buy the 3700. So we'll go $50 wide, and then on the call side, we'll go close to monthly H2, and we'll sell the 4450 call. So we'll go grab that. We'll sell the 4450, and we'll go $50 wide and buy the 4500. Okay. So 3750, 3700 put, 4450, 4500 call. Let's check this out on one contract. Now, a lot of times with Iron Condors, depending how wide you go, you're not going to have the most attractive risk reward in terms of max loss versus max profit. Best case scenario versus worst case scenario. So for this example, we got to put up $4,200 to potentially take home a little bit less than $800. So not the best risk reward, but again, that's best case scenario, worst case scenario. The way you want to look at this is you're in good shape. Like you're going to get that $800 as long as we're not trading above 4450 or below 3700 come the end of the month. So where's the real risk on this trade? The real risk is above 4450 and below 3700. So here's how I look at it. If you throw that trade into the Analyze tab, I know my max profit, about $800 per contract. What I'm a bit more concerned with is, what if about a week before expiration, we're rallying to the upside, we start taking out my short strike on the call side, or what if we roll over and we're taking out that 3750? So in terms of the risk reward, about a week out from expiration, if we're pushing towards 4450, we're going to be down about $1,400 per contract. So compare the $1,400 of risk to the $800 max profit. Well, that's a pretty good risk reward. Down here at 3750, we're down about 1,300. So keep in mind, we could gap up and never come back. We could gap down and never pop. But if you can manage this, the risk reward is a little bit closer to We're risking about $1,400 per contract. Add our short strikes to potentially take home about $800 of credit. And you could look at the SPY here for a cheaper trade, but that is one idea. So for those of you in the mastery, depending where we open tomorrow, I'm thinking, maybe a 5% risk might make sense there. So there's one trade idea for you guys. As far as a few things to focus on in the short term, it's all about 4,100. 4,100 lines up with your daily 21. It lines up with your hourly 21. It lines up with your monthly 21 EMA. So in the short term, if we can hold above 4,100, I do think the bulls have a chance here to push the market a little bit higher. If we close back under that daily 21, things could get a little bit sloppy. But I hope you guys find this helpful. Again, I think we've covered the bigger picture. We've talked about the short side. We've talked about shorting the bounces. I showed you where I want to short the bounces. And then this morning we looked at the trends in energy, natural gas, U.S. oil, the utilities. Those still look good to the upside. So for something not as directional, I am kind of digging this iron condor here. But hope you all find that helpful. I will let you go ahead and enjoy the rest of your night now, and we'll talk to you in the next one.